Hello everyone, welcome back to my channel. This is GZ the Great, and I know why you're here. You're here for another banger, another banging, spanking, great YouTube video. Or I mean, it could be on any other platform. I don't give it. I don't care. But you're here for another video about forex in particular, or like using the market and future trade. And in fact, today I do have a future trading video for you. But this is a strategy that you can also apply in the forex market. It's not a strategy that's too new to you guys. It's a strategy that most people who are just a bit past the beginner phase of trading will probably be aware of. And I'm just going to show you guys how you can trade this in a different light because personally for my own test, for my own back testing simulation, it works better this way. And which market structures or which like strategies am I speaking about? For example, well, if you want to know that, then wait a few seconds. But before we get into that, I want you guys to like this video. Like this video, I need your support to trigger the YouTube algorithm so that this message can spread so I can find other people like you, for example, to help with trading. How would you do that? Think about it. And also think about subscribing. I have more good content for you, helping you realize your own financial freedom through trading. I mean, how would you subscribe? Come on, do it now. I'll definitely, and you can see from past, and you can see what we do in the future. Just giving you guys more and more content, to help you guys train. Because I know trading is not easy. I've been scammed before. I have been in the position where I've been looking for a winning strategy, and I've struggled and looking jump from strategy to another. I know how it feels like to be a beginner, a complete beginner, to not know where to tend to, and everything is under behind the paywall. After watching my videos, you definitely won't need to pay for anything. Um, you don't need to if you can do the due diligence and work hard. Test the strategy yourself, learn and practice it in the market and exercise discipline there. So, without further ado, let's get into the video. The strategies we are talking about are just the basic strategies, and these are like two very common um, reversal patterns. You have the bearish double top, right? The double top. When you have a double top, it usually signals that the market is going to continue downward. So you are looking what to sell, for example, right? That's what usually happens with a double top. And also we have the head and shoulders, right? So the bearish head and shoulders, for example, you sell at the break of this neckline. Again, this is telling you that prices. So this like usually you've had an uptrend and price just decides to consolidate at the top for a bit. It consolidates for a while, it breaks the neckline, and then you sell, right? And same for the bullish inverted head and shoulders, for example, right? It's the reverse of this. Price is going down, and then it starts consolidating downstairs, right? It starts consolidating down there, and then it breaks the neckline and continues. And also the bullish double top. So these are the double top and the bearish. Sorry, the double top and the heads and shoulders, right? Is what we're talking about. And in fact, I don't review them these as reversal patterns per se. I view them as continuation patterns, and you see why I might do that because it's a very effective way of seeing the market. So what I want to do is demonstrate what I'm trying to say with a few polylines. So you see, usually if you have price, and there's something you can notice in the market, then I think you should open your charts freshly after this video just to look and see if what I'm saying is true, right? You have price going down, it's making lower lows, right? And then what does price do? Price can come and create a head and shoulders here. And often, if price does something like this, right, it continues downwards. Price continues downwards. That's basically it. It's usually the case that a head and shoulders is better this way. And usually I'd have my neckline, being more horizontal. If there's a break, the neckline more horizontally, I'd be selling. And we have our stop loss, over the structure. I usually have my stop loss here at the highest high of the heads and shoulders. So for example, to um, the high of the heads and shoulders, here I chose the ray, right? The highest high, and then we'll be looking for 2:1 as I usually do. And also, again, if you could also observe this, right? You have a downtrend. And what does price often do? comes and it creates a double top, and then it breaks that double top. It breaks this neckline, right? You can see this neckline. It breaks it and continues 2 times what you are risking. Not always going to move 2 times what you are risking. So when price moves at least one of what you are risking, you move your stop loss to break even, or you can secure some profit depending on how you trade. Makes a match this strategy. Um, right? And let me try and delete all these objects again. Delete it. And I want to show you guys how I see it also going up in the uptrend, for example. So we have our price making higher highs, right? Like this, higher highs. And what does price of it do, right? Right. We have a double bottom, for example. Price comes, makes a double bottom here. Again, you see the structure, right? This double bottom, for example, and then it's going to break this original high, this which will then be our neckline, and then it continues to 2 times. Let me try and fix the polyline. So you see what I'm trying to say, right? This again is like the double bottom. Again, you are using it as a continuation. If you have an uptrend, use the double bottom and the inverse bullish inverse heads and shoulders. If you see it as a continuation signal instead of a a reversal signal, for example. Yeah, that's basically it. And how do you determine trend? Well, the best way of determining trend is having an EMA or a moving average of any sort, and EMA having a good period on it. And usually the period I prefer is like 100 period. So I usually have that on my charts. So um let me add this one. This is even 50. 50 is also good. I think anything above 50 and between 50 and 100 probably makes sense. And hold on. The indicators. Just I want to use instead of a moving average, just a simple one. I can use this an exponential one, for example, 100 period. So we have it there smoothing. So if price is below exponential moving average, you know that we're in a downtrend. Price above it, we are in an uptrend. So in those cases, we are looking for these two structures. One of depending on the direction. If price is above, we are looking for these two structures. So we are looking for a bullish double bottom or a bullish inverted head and shoulders. And if it's a bearish trend like the price is below your moving average, for example, or you're looking for maybe a bearish double top or a bearish head and shoulders. So we are using them as continuation patterns. And I just want to backtest this on just a few data like this random data picked up. This is NAS 100. We're on the 1 hour time frame. I think 1 hour time frame is the one of the best time frames that can help you. It's, clearly see structure without necessarily having to wait, too short a time and also too long a time. I think it's a good time. So let's keep doing the test so that maybe with more simulations you guys can see more clearly how this strategy is expected to work, for example. So now we have price above the moving average. So we are looking for buys. We are looking for any maybe double bottom, for example, or a double bottom, right? Or we are looking for an inverse head and shoulders. So let's get one. We wait. There's a double top. There was a double top here. It came down, comes up, but we didn't take it. And price as quickly as it made the double top because the trend is strong. It got blown through, which is not what you want, right? You want it to be a continuation signal, for example. So that's one reason why. And again, I think we are having a double top here, um, right? Have price again. Let me try showing you price moves up and then moves down, creates an almost equal high, and it seems it's come to break it. I mean, it's already broken down like that. So we are looking at a 2:1, for example, here. Let me delete the polyline. So stop. Two lots on a $10,000 account. Nasdaq 100 might not be best, but depending on how you calculate your risk, you can. For me, I just have a different way of doing it. Okay, well, we didn't get triggered. That's fortunate. Um, Let me just keep it on. And it seems price is kind of like dangling. We don't know exactly where it is. Looks like it's above. And in fact, I'm actually seeing a head and shoulders scene. Excuse me if you can't see, but let me use the point line to make it as clear as possible. Right, have this, a move up, then it comes down, and then creates this high, comes down again, creates this high, comes down again, right? And we are already in a downtrend, it seems, because there's a previous high that hasn't been yet eclipsed, right? And it's this high, right? You can see that high. It hasn't yet been eclipsed. So if we get a break of the neckline here, right? If we get a break of the neckline here, I'm selling, for example, right? Just have to anticipate as best as you can. The previous one, we obviously didn't get triggered, but still anticipate. Um, that's the name of the game. And okay, so we got triggered. Let's see our open position. I think it's okay. Risking 34,000, 3,400 points, for example. 3,400 points. Price is already, I think, done more than 3,400. So you have your stop loss in and profit just a bit, and then watch price move. Um, Also, we didn't. If you are having 3,400, 3,400, right? So times two of that, that's a 2:1. Risk to reward would be about 6,900. Give or take, about 6,800. Let's okay. And price also, we've achieved that risk to reward, for example, and it was all of this, perceived, what do you say? Perceived head and shoulders, right? The bearish head and shoulders. We have this, and then we sold off of the break of the neckline, for example, right? We sold off the break of the neckline because the price was at that time at the break of the neckline. We are anticipating that the price would be below the moving average, and it was. So it's signaling it's a downtrend. And obviously, there's this high already that hasn't been already cleared, right? Showing you that we are in a downtrend, for example, and price has revisited the moving average. So now we are probably it's just below. So again, we are looking for sales. And I think you guys can now see the double top here. Um, so what do you know? And double C sell because it's broken the neckline. So you can use a market order here. Yes, so let's see. And price has already done 1-to-1 risk to reward. You can see prices move. The highest moves like 2,000, we're still 1,500. So you move your support to break it even. And price, then we can go back one candle, right? We move our stop loss into break even just a bit. And price went straight to our TP, but before that, it had to wake and it took us out. See, that's just how the market works. So you just have to make sure that you are protecting yourself all times. And even good trades can become, sour ending trades, but anyway, it's a winner, you take it. Let's keep going. So again, we are looking for another possible double bottom, right? What kind of strategies are we looking for? You ask yourself, you are looking for what? Heads and shoulders, bearish ones, or double tops, for example, because we're using them as continuation patterns. And again, I think we do have a double top here. And it might be hard to see, but let me use my polyline. And if you do more back testing, you see. So you have price moving up, comes down, moves up. It doesn't quite clear that high, but it's kind of a double top. and it's breaking the neckline. So what are we looking for? To sell 2:1, right? Risk reward. And, just have, I think it's already broken the neckline, so you can use a market order, for example, which is probably what we should have done on this first shoot, but then again, um, we didn't do that, and it doesn't matter. We'll be profitable regardless because the risk reward shows, and this is a loss. It was a losing trade. We sold because let's continue. um, Interesting stuff happening. And again, it looks like now this is an interesting structure, right? And as big as this structure is, right? And let me try and get these triangles off. So these rectangles off, you can see we have something which is like a double top. Price again using my polyline, price kind of makes a high, comes down, makes another high, and it's breaking that neckline. And it didn't quite clear the original low here, so it's valid. Again, it's valid. Um, it's a valid double top, for example. So if price goes below what we expect to be a neckline, we sell, and that's basically it. Just don't have to think too much about it. Just do your back testing, see if the strategy works for you, and which scenarios work and which ones don't work. I think price 7,000 already come very close, so we can just secure some profit. Um, I like securing profit actually, and it looks like price is just going to hit our stop loss at this point. Oh, in fact, never mind. That's why you just secure profit and you can just move on. Secure profit. Let me secure just a bit more. It's almost as I take profit in this. Come down, come on, come on. It didn't come down, it's let's keep going. And now we are looking for double bottoms. And this is very hard to pick. Let's just and we even missed it anyways. And I hope you guys can see what I'm seeing. We are having a double bottom here, right? Because look, we have price coming up. I mean, price coming down, up, down again. It's bouncing off of this low, and now it's breaking this neckline, for example. So if it breaks that neckline, we are buying, and I think you can put a market order here, looking at this as a double bottom, for example, a double bottom as a continuation um, structure to the upside, right? For an uptrend, the trend is up, it's above our moving average. We buy, and it hits our stop loss. But because of the power of risk reward, we are in profits, and that's what one thing you have to appreciate. Um, and again, it looks like we had another bounce here. Um, might just be in a consolidation, for example, but price goes up, down, bounce, comes up, bounces again, and it's breaking that neckline, right? So what are we doing? We are buying. Um, we can never be sure of where the market will be, but we still take our trades regardless. Another losing one, but we keep going. Um, and even let me go a few candles back, but this could have been conceived as, a double top because the wick it went past this previous high, but it still closed within. So if you're able to see this, for example, right, you'll have your um, execution price here, for example, and then your stop loss is above it. 2:1 risk to reward, um, right? And manage your trade as normal 2,500. Let's see. And it hits at sorry, it hits our stop loss again and again. We have the structure. it looks like a double top. Why? Because this week closes within, and again we are having price doing this, right? This uh, breaking a neckline, which is down here. So it breaks down neckline, and then you are expecting it to go. That's as simple as it is. The strategy. It's just it's there's nothing complicated about the strategy. Even if you lose this trade, you are still expected, over time to make money. So I want to go through a few as many trades as I possibly can without making the video too long for you guys. Right? Already price has done 1 to 1 already, risking 304. 340 pips, right? So just move our stop loss to 5. Just fast breaking this time. And just hope price goes to at like I never be sure. And price hits at TP again, right? So I think this is the second time we fixed, and that's out of how many trades? 9 trades. You don't always need to hit TP, but when you do hit TP, right, you should know that those rewards are adding up. Also, when your price moves 1 to 1, those rewards that when you are, if you're having break even trades, the reward there is that you're not losing money, right? Or if you are securing just a bit of the reward there is that you're making a little bit of money, and that's going to cover your ass as time goes on. Again, we're in a trade already here, but again, you can see we have a double top here, and we're using that as a continuation, right? Price goes up, down, and that's basically it. I mean, if we keep going, it's going to the video will be probably too long. I think the win rate was like 60%. It's actually around 70% when you account for everything. And when the risk reward is in your favor, you have like no chance of clearing your account. If you look at things in the long term, which is what the strategy is all about. So this is how I trade. Heads and shoulders and these reversal patterns, right? These patterns that everyone knows are reversal. I don't necessarily trade, especially the first four, and I'll do videos on how I trade the rest of these, right? How to trade the rest of these, for example, and look for help you guys understand how you can navigate the market. I personally don't use these first four as reversal patterns. I use them as continuation patterns. And the trend is set by the moving average, for example, right? So the depending on what you like, I have the moving average at 100 period and what do you call it again? An exponential moving average. It's at the 100 period, and it's supposed to help you guys. It's supposed to help any trader know exactly where the trend is. So if you like the video, please like the video, subscribe, think of subscribing, follow, share, and like it. I hope you guys will get a lot more out of this. Take time to sit down and back test. I think if you can't use Forex Tester because you can't pay for it, it might be expensive. You can use Forex Drive, right? Forex Drive.net, and I'm using Brave. Forex Forex Drive back tester. Right, this simulator is based on trading view, for example. It's free, it's online, you can try it for free, and you log in with your email, and one day I'll just take you guys through like how the platform looks like in the next few videos. But it's a free backtesting software that you can use and benefit from. And if you can use like Forest Tester, for example, or soft effects and so on and so forth, then you can use that one. But always make sure that you spend time doing your due diligence, doing your own backtest, trading, and having that discipline in the market when and the time comes to it. And hopefully you get good results. I wish you guys all the best. Take care and happy trading.